Hello, everybody. Welcome back. So, live stream tonight if you're interested in that. Links for the Patreon in the description. Otherwise, let's have a little tiny look at this. So, this is an absolute tear up, super bull. No signs of letting up. Or well, I mean, there is signs of letting up. I mean, massive signs, to be honest with you. But it's one of those things, isn't it? Really, you can't get in the way of such a monster when it's tearing up. Looking at this on the 4 hourly, 1, 2, 3, possibly a fourth drive of bearish divergence now brewing on this. Obviously, this can all get cancelled out. This is my fear within this market right now, is that as much as I want to take part in some of these tear-ups, right? Because I mean there are, and we might see some altcoins really start to lift up at this point. My fear of the market is greater than my urge to take part in it. And without sort of keep on reiterating my viewpoint for that, we've had a good year, and then the back end of last year was exceptional, and I'm happy with that. And I can't justify getting involved at the moment, despite how bullish it looks. And you know the deal. When everybody's bullish, it's going to end in tears, isn't it, really? Most of the time. But in saying that, let's just have a look outside of the fact that we've got the four drives of bearish divergence on Bitcoin there on the 4 hourly. Our next target really is what we were saying yesterday, roughly around $52,000. That's basically the next target. That's where I'll be looking to see this next move up to. Will be the next major resistance based around this candle body over here, push, and the Bollinger Band top on the weekly, and also this major rejection, which I mean that's basically it. Big rejection, pullback, big rejection, continuation. So the 52,000, or just short of 52,000, is basically where we'll be looking to see this move up to. Again, recognizing that the higher term time frames are losing momentum on money flow, but it's good until it's not. That is the main thing to take away from all this. It's good until it's not. So recognize the higher term time frame resistance. Recognize the losing of momentum on the high term time frames and the short term time frames. So I'm not doing this to re-establish my particular bias. Like I say, I am happy for it to run up. Got plenty of Bitcoins hodling, but trading, it just does not feel right. It doesn't feel right to enter into, to be honest with you, pretty much anything at this point without a larger pullback. And that's not because I want to buy it at lower prices. That's not what it is that I'm referring to. I don't mind buying at higher prices if the telltale signs are not there. And at the moment, we've got telltale signs to say that we are either approaching a top or we've already surpassed what is considered to be a top. And this is just overextended, unrealistic price action that is unable to hold these levels, and has to come down. Like I say, I don't. It's not that I want to buy lower. I want to buy safer. Does that make sense? Hopefully, that is one way that you could try and interpret what it is as a trader. Right? It's not that I'm desperate for low prices, man. Oh, it's that I'm basically I just need to feel safer in any kind of trade. And after exiting the trades that we enjoyed so much from last year, that I mean that's what I'm happy about. I'm happy about buying low, selling high. I'm not happy about buying high, selling higher when we've got weekly dwindling momentum, we've got 4 hourly dwindling momentum, and we've got Dixie basically brewing its uptrend. 4 hourly going across retest, V-shaped recovery, up, away we go. And now we're pushing back up after a consolidation on the 4 hourly. Looks like we want to continue to go up. You know the deal, right, with Dixie. Every aspect of this chart now is really working on some larger breakout taking place soon, pretty soon. Probably by the end of this week, we'll start to see the true nature of this Dixie. And that will only be the start of it. That's my main takeaway from all these markets, right? We've been here before. We've seen it all before. It's nothing new. And so, yeah, allow it to happen. S&P obviously not opened. I'm not looking at the futures market, just looking at S&P here. And yeah, I mean, a small, subtle, tiny piece of rejection. It's nothing particularly interesting. I do think that this one, again, similar to Bitcoin, is running out of steam. Bearish divergence taking place here on the money flow index on the 4-hourly. Take it to the daily. Bearish divergence on the daily and weekly. What do we have on the weekly? No bearish divergence on at the moment. So unlike Bitcoin, which has got the massive, huge divergence on the money flow index on the weekly, S&P has not. S&P is basically at a critical overheated level, pushing that 95. And there is basically one main rule that I would have before buying anything, which is have a look at the money flow index, have a look at it on the weekly. Is it above the comfort zone, which is above 80? If it is, okay, it's bullish, but we're entering into the last stage. Is it in the 90s? If it is, then really you've got to have a quiet word with yourself at what it is that you're looking to achieve here. If it's pushing 95, then really your risk tolerance does not exist. You basically do not care whatsoever about losing money. And I'm not saying that you will lose money. We've back tested this loads of times. The peaks, on the money flow index don't come in at the absolute peaks. They come in close to the peaks. We had the peak over here. We went up a little bit, push all the way down. This is a peak over here. It didn't mark the absolute top. A little bit further, push, down we go. Over and over and over and over again. We can say quite safely that it's the divergence that matters more than anything. And this one got the divergence and boosh. So just a single drive, a single lower low, a lower high, after an overheated read is often the place to get the larger pullback. But look, I'm really honestly trying to scare anybody out of any positions in any markets. Make these videos every morning because this is how I make my money anyway. So I sit in the mornings and I look at charts and I just try to work out, is there any money to be made in these markets? Is it safe? Is it risky? Is it an obvious trade? Is it going to work? And at the moment, I just have to keep saying to myself, look, it's going to keep going up until it stops. And when it stops, it will go down. And then when it goes down, then I can start to look for less risky trades, because that's the best way to trade. You open trades in the red and you close trades in the green. So at the moment, what we're seeing generally is green, 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 green. And that for me is not a place to enter into a trade. Red is better, green not as good. But it doesn't mean you can't scalp some here and there. But every part of the charts, whether it's S&P, Nasdaq, Bitcoin, Dixie, they're all telling me the same thing, which is, look, you stick to your plan. And my plan has been pretty obvious the entire time. Buy low, sell when Bitcoin approaches the 48,000, and then sit back and wait, just chill. So this is the dominance chart, and we'll finish off here. So the dominance chart now getting a rejection on the top of the Bollinger Band. It is quite close to this descending trend line, which is basically a symmetrical triangle. We've got a pump signal, so I would be looking for this to actually break out rather than break down. However, if we are going to start the trend down, that would be good for altcoins. It's not for me somewhere I would feel like a great setup exists. There is evidence definitely for further upside on altcoins if we do get this rejection. I mean, that's basically what this would be. But personally, I would be more inclined to sit and wait for a more obvious area on the Bitcoin dominance chart, looking for a rejection roughly around 58% dominance, which is still a fair little trek away from where we are right now. That would be a decent rejection area on a horizontal based on major points in time. And it's here where I would be thinking, all right, we can really start to consider an actual alt season around 58% dominance. A clear rejection from there wouldn't just be a little rejection, it would be a nice rejection that could even take us right back down towards into the upper 48% zone, roughly into this box, this major box. Until then, honestly, as much as altcoins are going to be moved up with Bitcoin, and you'll see, like today, for instance, some of the smaller cap coins up 10% or more. These look appealing in hindsight. Say, oh, I wish I could have entered that yesterday. 10% would have been great. But when you get a clearer, more significant rejection, you get a longer period of time where altcoins do rally against Bitcoin. So that would be a real alt season, and one that we could really enjoy. That's where hundreds of percents get made, and it might not even happen from here. I would be looking for 58% dominance for the first area, and roughly around 64% dominance for the next area. And again, these are way more appealing to me because the rejection would be clearer, longer lasting, more significant gains, less risk involved, really, because you could not guarantee, but you would certainly be aiming for hundreds of percents from these areas. And here, what you'd be looking for would be decent trades, but in the face of a potential breakout, and it all could go completely wrong. So it's all about risk to reward. And yeah, the rewards are out there, but the risk to me outweighs the reward, so I still have to sit back and say, it's not really for me. It's not for me at all. I might not have sold the $50,000, but I did sell the $48,000, which is fine. And then again, with altcoins, most of the altcoins that I bought and sold, I sold at higher levels than where we are at right now. So zooming out, recognizing the plan that I set for myself and the plan that has been executed, it's actually very successful. But now is the patience and the waiting game. And you really, well, for me, I have to say, all right, don't FOMO. You don't FOMO. Don't FOMO. That's not what you do. So just whatever happens here, let it be. If people are making money, be grateful and happy for them. But stick to your analysis, because it's my analysis that makes me the money, not the comments in the YouTube, and not the permaballs on Twitter. But I have to accept that, things do look good, and they will continue to look good until the rejection. And the rejection, as far as I can see, can happen any minute now. It could happen today, it could happen Friday, it could happen next week, might not happen until next month, but it's going to happen. And the risk outweighs the reward for me to enter into anything at these prices. Outside of perhaps maybe a major pullback, and that would be literally a dead cat bounce that I could do, like the one we did last week on Monero. That was a good one, but I'd be looking for something more like that, but involving the entire market. And I wouldn't be targeting new local highs. I'd be targeting a 5% here or there on charts which have huge liquidity, so I can slip in and out of the order books, no problems. Right. Nice and boring. I appreciate that. And that's not really what people want to hear, but it is my analysis, and that is my trade setup, and I have to stick to it. I'm not going to change because it's going to get me more views on YouTube. YouTube is, if anything, it's just a hobby, really. The money does not come from YouTube for me. The money comes from trading, and as far as I can tell, we are looking for a reversal. And that's what I am waiting for. Right, I'll leave it with you there. Another boring video for all of you. But it is based on evidence. I'm not just making this stuff up. I've shown you the divergence. I've shown you the Dixie. I've shown you the S&P. I could show you loads of other stuff that still, points to a little bit more upside. Obviously, the trend is up, but the momentum across the board is down. And that is a warning sign. It's a big red flag. It's for Bitcoin specifically, the momentum is down from the 4-hourly all the way up to the weekly. Bit of a problem, that one, really. And just do not get complacent, and don't get used to these higher prices, and try never to FOMO. You will never miss out on this market. It's a 24-hour market, and it's going to keep going up over time. But right now, We are overdue a correction, absolutely overdue a correction. And if I was to sell to anybody, I would always sell when the money flow index is high, because that references effectively the order books. You want to dump into somebody, you dump into the people buying these higher areas. They don't think it's ever going to slow down. This is what causes bubble pops. Crypto especially. You see a bubble pop, 2017 into 18, people were buying like crazy. It's going to 1 million. Boosh! Went back down to 3 grand. 2019, oh, the bull market's begun. We're going to up to 20 grand again, back up to the all-time high. Easy peasy, boosh. Popped at 14, back down to 6. It just happens every time. It's just the nature of all markets, not so much crypto, although crypto is a good example of how bubble pops occur frequently, and every year basically you see bubble pops all over the place. You see something peak at a certain price and pull back 60%. That's normal for crypto, but it's basically a bubble pop. So we are looking for something like that, and it's absolutely normal. Again, all markets are doing the same thing, and that's one of the main reasons I'm concerned. 'Cause it's not just crypto, it's not just Bitcoin, it's Nasdaq, it's S&P, it's individual stocks, it's the lot, it's everybody, and it's not a big problem. It's just all part of the nature of markets. Really, they reach prices that they aren't able to hold, and then they come down. It's normal. It's normal. Somebody wants to take profit. They take profit in times of ecstatic, over emotional buying, and they sell it to hopefully somebody who won't mind losing out, because that's basically what's going to happen. They sell to Noob Master. But like, if you zoom out over a long enough period and give it another 18 months, then if you did buy this 50,000, then I'm sure you'll probably be looking to double your money anyway. So like, if you're watching this and the market has crashed and you're down 15, 20, 30% or whatever, don't get too upset about it. On a higher term, a larger outlook, then it will keep going up. But right now, I have no interest in picking anything up. I have to keep saying, no interest in doing it. No interest in doing it. The only way I will do it is if we do see a bit of a breakdown, like a quick dump, and maybe if, as long as we're holding above certain areas, like for Bitcoin 46,500, then yeah, we could pick that up for a scalpy trade, and you could trade altcoins through association with that dump. But really, nothing's changed. Right, I'll leave with you there. Nice and boring. Thanks for watching. Feel free to like and subscribe, and have a nice day. Take it easy.